Hi, I'm Jonathan Gurney, Portfolio Manager at Gurney Financial. The purpose of these videos is to educate and keep clients aware of what we are seeing on a daily basis. Our goal is to close the gap in communication between clients and the actual person managing their assets. We use fundamentals primarily and technicals as part of our analysis. We hope the charts and education help clients and viewers alike. A friendly reminder that this video is not to be taken as financial advice. Should you have questions, feel free to reach out to us through email, social media comment section, and please subscribe to our YouTube channel. It'll update you when new material comes out. So let's get to it. Still in that same price range. A lot of people get emotional. Up, down, up, down. We're in a trading range, and until I see key levels broken, probably not going to be in because we've had outperformance in a few of our portfolios and just really not seeing the risk reward there. Sure, did we miss out on about 2% in the last couple days? Yes, I am perfectly fine with that. It's sure, I wish I were still in at that point, but I'm still not seeing a huge reason to take the risk that I'm wanting to take. The areas I want to be in are really not showing strength at this point. So let's go over a timeline and you'll see kind of the concerns that I'm seeing. Again, short term, concerned, midterm, we'll get out of this range and probably hit higher highs. So I'm not bearish on the economy. I'm concerned short term, which will probably test lower levels. And if that's not, I will chase higher, and I'm fine with that, perfectly fine with that. Tariffs kick in this weekend. So don't be surprised if President Trump releases some news that he's going to reduce the threat or just cut the threat or tariffs in general short term. Hopefully we can actually get a deal, something more concrete. There is a balance that the president he's in a difficult situation because he's wanting the stock market to go high. His reelection is likely contingent upon a trade deal and wanting low interest rates. So there's combating forces there where he's got to continue creating chaos to get the rate cuts that he wants. But his reelection is probably contingent upon more benefits from trade. So short term, concerned. I'm optimistic we'll eventually get something in trade, but it might not be this year. And I'm not really seeing any real incentive from China needing to get a deal this year. They're doing things over there in China that will help their economy. Their economy is worse than ours. That is just the reality. So seeing some of this news and saying they're going to come to the table and be more calm during this period, who knows what that means? Virtually, again, the 3 weeks, there's basically 2 to 3 weeks I'm really concerned with, and I'll probably get back in. Virtually, there are no earnings on tap before the next Fed rate decision, which is September 18th. Could China again use the Fed meeting as leverage like they did last time? Who knows? Again, if you don't know that rhetoric, the last Fed meeting, China basically came in and that morning said, we're going to threaten with more tariffs, which freaked out the market. Then, of course, President Trump freaked out and blamed everything on the Fed, which is a reoccurring theme. So let's go over the pros and cons that we're seeing quickly. Many technicals improving this week. This is good to see. The VIX, the fear index, is out of the 20s. I want to see it consistently stay there. I'm not sure we will, but currently we're seeing good movement there. The TRAN, so transportations and IWM, the Russell 2000, bounce off their low level, which I expected to happen, but I'm just still not seeing the risk reward. I want to see some key levels held. There was a bullish Pennant formation, which is a technical indicator that is a good sign. We'll talk about that later. Retail earnings came in strong, which is fantastic. It just proves that the consumer is strong. Again, I'm not concerned midterm. Short term, I think we need more testing lower, and that'll bring more buying in. So if people are assuming like I'm betting against the market and stuff, no, that is not the case. I'm just backing off risk because I had done pretty well on accounts over the last couple months, weeks, and I'm just saying this is okay to back off here. I'm fine if we miss out on a couple percentage points. Another pro is China did blink first, basically saying We pledged to not retaliate on the latest tariff threat by the U.S., at least not for now. So who knows what the heck that means, but that's a big reason why we went higher the last couple of days. I'm not sure it should have, but it did. Globally, central banks are cutting. This is ideal for equities. Wednesday and Thursday, we're able to hold on to gains on a strong open. So in short, what I'm saying, the market opened strong Wednesday and Thursday and remained strong throughout the rest of the day, which is very good. Today is all over the place. I'm doing this at like 2:36. I don't expect a ton of movement here. Everything is on low volume. So to the cons list, many technicals improved. Unfortunately, it was on very small volume, so I'm not really seeing any big buyers come in, not any big institutional buying come in, which in my mind, I'm despite some of the pros that I was seeing in the technicals moving and good movement up, I'm not really sure it really equates to anything because we're not really seeing it on volume. So cons, we're in the same range we've been in for a month, the whole month of August, basically. Friday could not hold the 2940 level. That's a level we continue to test, could not break through. We're going to have to get some real news, likely on trade, to get past that. RSI did get above 50. We've talked about that. That is ideal and then kind of a pro, but I'm a little concerned it's not going to hold, and it might not even hold today. So lack of strength among the risk on assets, so communication services, consumer discretionary, despite it being a strong consumer, not really seeing those areas lead during this upswing. The market and President Trump are expecting and want a 50 basis point cut in September. Don't expect it. Expect a 25 basis point cut and in September and one in October. So that's going to cause chaos too, and we might see the same story where he blames the Fed, put on more tariffs to cause more chaos to get even more cuts. So it's a game that's being played. Who knows what's going to happen? Really, the 2-week gap between the next potential rate cut is my biggest concern. Gold and bonds continue to show strength at oversold levels. Gold and silver probably have a little more room to run up, to be honest with you. That is a con in my mind. I do actually have some invested in both of those for some protection. It's a short-term trade, not an investment. 10 and 2 Treasury remain inverted. Friday, it might uninvert a little bit. Not an indicator in my mind. Regardless, something to be noteworthy up, but it's not. It's something I'm going to trade off. In short, there's mixed economic signals. So let's transition to the charts, and we can go from there. Okay, like I said, this is going to go a little bit faster because I spent too much time on the pros and cons. Again, 2950 on the S&P 500 to the 2800, testing the 2940 level. It continues to struggle there. I want to see it get through there. That's basically all I'm saying. I want to see it get through 2940 and finally 2950, and I'll probably get back in, and I'm fine with that. I want to see more consistency above the RSI of 50, relative strength index of 50. Good things happen when we stay above this. We get more consistent returns over a longer period. That's what I want to see. Next chart. This is the Nasdaq. Same story. We're in that range. That's all I'm going to say. Could we see another test? Wouldn't surprise me, to be honest with you. It might be constructive for the market that does happen. The Russell 2000, the IWM that we spoke of last week, was that we're saying every time it hits this level, hopefully we're done selling. And that's what happened this week. I took profits right around here, not in IWM specifically, but in the market, just saying, hey, I got to the 10-day moving average. I'm okay if it goes a little bit higher. I'm just not seeing the strength that I want to see yet. The sad part is we're not even to the 200-day moving average. That's how bad the Russell 2000 is. I would like to see some strength there eventually, and probably will short in the near future, but still concerned. Another positive thing that we saw this week was the transportations. Again, it tested this range for a while, and every time it does, hopefully it continues to bounce up, but we struggled at the 200-day moving average again. So with the TRAN and the Russell 2000, we're in no man's land. Basically everything, we're still in no man's land. And until I see more strength above the 50 RSI, I just have no appetite for this. The yield curve, this was as the close of yesterday. You're seeing it's negative. This was last week's. Just, again, not this week, last week. Just to kind of show you a reference that it is negative. Again, not a reason to sell, not a reason to freak out, despite what the news will tell you. Kind of an interesting chart that I put out this week. It shows the S&P 500 versus the 10-year Treasury. The blue is the S&P 500, the 10-year Treasury. You can see usually when it hits around this level historically, notice this is basically a 20-year span. So this is a long time frame. Whenever it hits this level, we usually see a little dip first, some concern, and then go higher. That's kind of what I'm saying. I'm a little concerned short term. Bull pennant, if you have no idea what that is, it's basically a consolidation sideways. So you're seeing this V kind of megaphone shape, triangle shape here. So the price is ranged between here. We finally went out of that range. That's basically a bull pennant. The thing that we're struggling with is we're struggling right at the 200-day moving average. This is short term, so just ignore that. But you're seeing it's actually short term right at that test. So don't focus on this short term. This is basically a month time frame to show you what a bull pennant is. Some education for you. Let's see what else we have. To reiterate, this kind of just shows the chop that we've had. Good things happen above 50. The 2940 level, this is today. We continue to struggle touch, getting past the 2940 level. Until we do, I just don't have an appetite for it. So this is interesting too. So stocks above the 50-day moving average, just more of an interesting perspective. If you think we're oversold here, this was the end of 2019 where 1.2% of stocks were over the 50-day moving average. Right now we're at virtually 43% over the 50-day moving average. So we're kind of in no man's land there. And finally, to get to another kind of concerning thing, it's headed into Labor Day. The month of September usually tends to be one of the worst months. It doesn't mean it's going to happen that way, but September tends to be a bad month for the market. Another concerning thing is you're kind of seeing it in the price of oil today too. I mean, this was as of 210, so it's a little behind, but it's an ugly day. And this is not uncommon. Usually, people drive less after Labor Day. So see, this is called an ugly chart. A downward slope. Talk about a trend and not being able to get out, not getting above 50 and staying there. This is ugly. And many people believe, follow the price of oil tends to correlate pretty closely to moves in the market. Not always, not something I always believe in, but you're seeing another concern that I am taking kind of seriously there. So let's transition real quick. I will kind of give you my ending thoughts. In short, we have a mixed story. There's pros and cons. Midterm, I believe the move is higher, but I'm happy to wait at these levels. I simply don't believe the risk reward is worth it right now. If I have to chase, I will, but I don't believe I'm going to have to. This doesn't mean I think the world is ending. I want to make that very clear. We've outperformed short term, and I'm willing to take the risk to the upside. Many technical analysts believe a lower test would be good and constructive. I believe that would be good. I want to get in at lower prices as well. I'm just not seeing a reason why it really went much higher this week. But it was on low volume, which makes me even more concerned. So short term, I don't like the setup. But midterm, probably get in the next 2 to 3 weeks. So I hope that helps. Let us know if you have any questions. Thanks again for following us, and thanks for your trust. Have a great rest of the week, and enjoy the weather. It's going to be a nice day in Ohio. If you're outside I have clients everywhere, so when I have nice weather in Ohio, I'm going to shove that in your face a little bit. That was a little bit abrupt, but it's nice to have nice weather in Ohio. Let's just put it that way. We're very fortunate to have that at this time of year. It's very nice. So love you all. Keep in touch. Let me know if you're really concerned. Just give me a call. Thanks again.